Turning back to Meta, taking a closer look at its main revenue source, and of course that is digital ad spend. It's been shrinking and everyone's taking notice. Most recently, JMP Securities cuts their target for the Facebook parent as well as for Alphabet. Insider intelligence notes that the company's combined share of digital ad dollars is expected to fall below 50% by next year. Google's former SVP of Ads and Commerce, Sridhar Ramaswamy, joins us this morning. Sridhar currently serves as a venture partner at Greylock and co-founder and CEO of Neeva, an ad-free search engine. Sridhar, it's great to have you. Appreciate your guidance on a tough question right now for the market because there's differences across the ad space given different ecosystems. There's the targeting issue, the difference between digital and television. But your main point appears to be that the macro is unequivocal right now.
Macro is pretty hard. I think it's an unfortunate kind of double wallop. Obviously, they got hit big when COVID came along. Last year was a bumper year, and now I think with the recession looming, ad spend is going to be down again, and their growth rates are going to be down. I mean, digital growth rates are still very healthy, but they're going to come down somewhat.
And your broader point is that it's not going to be limited to, say, individual categories. It's not a travel and leisure dynamic, for example.
Unlike in 2020, this is going to be across the board. But there will be differences. Different advertisers, depending on their level of sophistication, are going to take a hard look at what's working. I expect that the smaller ad platforms, the Twitters, the Pinterest, the Snaps, they tend to get affected a little bit more because their volumes are not as high. The proof is not quite as unequivocal that they're going to be effective. And so advertisers often will look there. The smarter ones, by the way, are not going to turn things off. They're going to look at spend and go, well, I can get 60, 70% of the volume that I am getting for a 50% reduction in these campaigns. So different people are going to react differently. But I do think that the smaller players will be affected more, but all of them are going to be affected in a pretty big way.
Right. So the smaller players are going to be affected more, Sridhar, but Google is seen by many as sort of the most insulated or less vulnerable to these macro factors. And certainly we haven't heard any commentary from the company about pulling back in terms of spending or hiring. Do you think that that is in the cards in the second half of this year?
I mean, they are not as aggressive in hiring. They're not as aggressive in the kind of offers that they make. It's a very smart team. So they're going to adjust. But I think this recession will come after everyone. And so definitely there's going to be drop in spends there. And as you folks know, advertising, especially search advertising, is the biggest cash cow that Google has. It'll affect them. Absolutely.
It's fascinating, Sridhar, that you were the former SVP of Ads and Commerce at Google, and now you are CEO of an ad-free search engine. Explain that a little bit, why you think there's space for that kind of competition, what you learned at Google that sort of made you think that this is needed or wanted among consumers.
I mean, first of all, competition is a good thing. It forces everybody to step up and do better. And from that perspective, I think of Neeva as a natural complement. I started Neeva because I thought it was really important to go back to the basics of how the internet should work for all of us. I think all of us are sort of like a little bit numb to how much our data is getting exploited. So we wanted to go back, create a very simple service. We are paid by customers and customers only. But we also have a freemium product. It's absolutely noticed for folks to try Neeva. And our bet is genuinely that we can create a better product over the long term. This is where tech scale is actually going to help us. The more people we get, the more we are able to invest back into the business. So I think of products like Neeva or Proton Mail as interesting counterpoints to the current ad-dominated ethos of the internet.
I wonder, Sridhar, finally, whether or not some of these players who have the ability to offset this weakness with subscriptions, how powerful a lever is that right now?
It's a slow burn for people like Google. Something like $100 million in subscription revenue really doesn't count for very much. It's for the very patient. So I don't think of subscriptions for these folks as any kind of immediate panacea, but they are long-term bets that they can choose to make. I don't think it's anything that's going to have a meaningful effect in the near term.